Welcome to the Nadex Application and Strategy webinar series. My name is Daryl Martin. I'm with apexinvesting.com. Before we get started today, let me throw up the standard risk disclaimer and put all the information on there. You know, it's basically trading involves risk. Make sure you know what you do before you're doing it. This is unique information presented by Apex Investing. And again, same thing. Investing can result in loss. You're responsible for your own decisions. And one of the nice things about this disclosure, though, is you won't see you can lose more than what's in your account. You can't get a margin call. You can't put some money up, but then they're like, you went negative. The market gapped. Sorry. You need to go ahead and wire some money immediately. That'll never happen with Nadex because you fully collateralize your trade up front, so risk is, at least capped. Now, you don't have to take on that max loss. You can decide to get out earlier, but it is capped, should the market move dramatically against you. And you don't have to get out. So what about if you don't have an account with Nadex? First thing, hop on over here to nadex.com, okay? And click on Open an Account. Or maybe you want a demo account. Some of y'all don't even have a demo yet. So first let me show you how to get a demo. Go to Trading, go to Demo Trading Account. And again, that's Demo Trading Account over on nadex.com. Fill in your username, your first name, your last name, phone number, and email address, and click Apply for Demo. When you do that, you'll be able to log in. Like, you should do this. If you don't have one, this step you should be doing right now because you could be done with it already. Okay? So go ahead and do that. It'll make it a lot easier to follow along and get that all set up and running. Okay? All right, and then let me put one more thing up there for you. Let's see here. Some people saying it's not showing up. All right, give me a second here. I am the presenter, but let me choose a screen. Sorry about that. Oh, okay, here we go. There you go. Now you'll be able to see it. Apologize about that. Okay, so everything ought to be up and running and good for you. No problem. Thank you for letting me know. All right, so again, right there under nadex.com, go to Trading, go to Demo Trading Account. And put in your username, first name, last name, phone number, email address. It's right there, and you'll be set up and ready to go, okay? Then click Apply for Demo, go check your email, and within a few seconds, you'll be able to go up here and click Log In. And you'll be able to get into the platform. I'm going to go over some basics with you today and show you how everything works. To get your live account, you just go to Open an Account. It takes about 5 minutes normally to go from Open a Trading Account to Funded. And the minimum funding requirement is $100 to open a live account. One of the benefits of opening a live account is if you open a live account and place a trade, whether it's 100 contracts risking $50 a piece or one contract risking $3. If you place one live trade, then you can get your demo account extended for a year. So as soon as you do fund that account with at least $100 or more and place at least a trade or more, then just call Nadex up and ask them to extend it, and they'll extend it out for you so you can get access to it. Okay? Let's see here. Anyway, so that'll get you, going right there. And definitely having a live doesn't make you experienced. That's why I said, how do you feel? That's why I had two questions. But anyway, so then you'll log in the same place. When you do a demo login, you're going to hit Demo Account to log in. Pretty easy. All right. Now, what about if you want to know more, if you want to get access to the recording of this webinar and previous webinars that we've done and other tools that can help you that are free? Hop on over to apexinvesting.com. Then just click on the Get Free Access orange button right there. It costs nothing. We have live webinars nearly every single week. I've got daily live market commentary where I do a radio show. It's actually broadcasted inside the room. We have a forum. We have a Nadex binary and spread scanner both. And so once you've signed up and you're in, then you'll just hop into a couple places that you want to go pretty quick. One is you're going to want to get set up with real charts, okay? Underlying market charts. I'm not talking about web-based charts. I'm not talking about indicative charts. I'm not talking about MetaTrader 4 where you don't have volume, okay? Because even if you're just a Forex trader, you need volume. And how do we do that? Well, over at Apex, we actually pull the futures volume for the Forex pairs. And I show you how to get access to platform and to live data for futures and forex for free. It's under actually one of the first courses we have up here. All the courses are free. And if you go to the active courses, setting up Ninja Trader, data feeds, all that stuff. So go and check that out. That'll be one of the first places to go. Another place is you may want to register for our weekly webinars. They're on Thursdays. But then what about webinar recordings? What about more basic information on Nadex? What about more advanced information? Just go under Education and click right down here. You're going to see Nadex tutorials. And there's a lot of 15-minute step-by-step tutorials that you can watch. There's a couple longer ones, but most of those are about 15 minutes long. Okay? And then as far as recordings, like where is this webinar going to go? Where are other webinars we've done previously on basics and advanced topics? Right under here under bonus webinars, and even the Thursday webinars are right up there. So again, right there under Education, that'll get you going pretty quick with just a lot, more than you can handle of information to fill in all the blanks for you. And then if you have questions, which you're going to have questions, whether you're experienced or new, go to the forum. And on the forum, we have all sorts of, whole variety from trading psychology to money management and setting up your computer, data feeds, entities, all sorts of stuff like that. Interacting with other traders, looking at charts, coming up with different strategies and ways to use them on those charts, systems for rules for entry and exit, how to read the markets, how to find the best contract, the best binary, the best spread, putting it all together in a game plan and executing it, and then of course going back and looking at what you did, what you do right that you can repeat, what you do wrong that you don't want to repeat, okay? And basically the 12 steps to trading. So these ought to encompass pretty much any topic that you can think of in trading. It ought to be in S12. And if you don't know where to ask a question, some of it's very intuitive, but if you don't know where, just hop over here to the general trading forum and we'll move your post for you, and you can put post in there, okay? But we'll be glad to help you out and get you going. The one other thing that we're going to be going over today that you're going to want access to is you can go over here to the scanners, you can go to the Nadex binary scanner, and on the binary scanner, you'll be able to go in and you can choose what binary contracts you want to look at and make life really easy. And I'll be showing you this versus the platform and how it can make your life a lot easier, a lot of the math a lot easier, finding the right contract a lot easier. It's free. It may feel a little bit overwhelming, but once you get used to it, it's 100 times easier to do it. Okay? So the scanners will be available, should be available pretty much any time that Nadex is available. So maybe they're doing an update on demo, and so you just go over and you just click on live and see if it's feeding. You may also need to make sure you go over to the Nadex platform itself, make sure it's feeding. So then maybe they're doing an update. So that might be the reason, Greg. So just go over and make sure you check out the actual platform itself, see if there's data coming in, okay? And then you can also just click on live, because if you click live, it's going to come from the live data feed. If you click demo, it's going to come from the demo data feed. And that would be the reason. And that's how you can know instantly. Okay, so we got all this. We got, demo account. We got live account. We got scanner. We got all that stuff set up. But let's go ahead and hop into what the topic is going to be about today. And let me see here. Let me pull that up. I had another one over here, but I got to make sure I open the right one up. Let's see. 1 second. What we're going to be covering today is basically just basics of Nadex binaries. That's what you're really, some of y'all are brand new and you have not even touched them, or maybe you've thought about it, but you're, you don't necessarily have it down. So it's really Nadex binaries 101. And so we're going to go into, getting started with Nadex. Okay? And what is a Nadex binary? What markets and hours can I trade? And then how can I place entry and exit orders? So, that's really, what we're focusing on is just to make sure you have the basics down. Okay? Let's see here. So getting started with Nadex, some of y'all, we just taught you how do you get a demo account, how do you get a live account. You need to be a U.S. resident. Be the first step. Go to their website, fill out the forms. The only alternatives if you're not a U.S. resident is if you have a U.S. company with a U.S. bank account and a U.S. federal ID number, then there is a process for that. You need to contact Nadex to find out more about how that works. And then from that, let's go into what actually is a binary. A binary is a true or false statement. Okay? So again, it's just a true or false statement. And I think the easiest way is we're going to start off with just the basic platform and go into that with you. And then I'll walk into some more pieces. Okay? If you have any questions as we're going, I'm going to encourage you to ask them. I'll either answer them right away if they are applicable, or I'll answer them by the end of the webinar if they're not. So, but I definitely want you to ask questions. This really is a basics newbie webinar. So if you've been around for a while, if you feel like you know Nadex backwards and forwards, a lot of this is going to be basics. But you want to make sure you have these basics down, because there's little things that people make mistakes on that they just don't know. And so I want to help you save you from many of those mistakes as possible. And so we'll get that knocked out sort of out of the gate for you. Okay? And next week we're going to get even in more detail, because I'm going to talk about a lot of the misconceptions when it comes right down to the application of what contract to trade and knowing the best contract to trade and how to put it all together. We're going to dig deeper. We're going to go into, out of the money, in the money, at the money binaries. We're going to talk about strangles. We're going to talk about butterflies, premium collection trades. We're going to put all those pieces. So we're going to develop this further and further, make sure you have not only the basics, but the small intricacies as well. And then we're going to dive into more advanced strategies and when might be the best time to use them. So, to start off, what we're going to do is talk about just the markets that are available. Okay? You can see them on here by expanding everything out. You can also see them on the Nadex website, or you could go just directly to the scanner itself. And let's see here. Right here on the scanner at the top, what you'll see is all the different markets. And you'll see which ones are open, which ones are not currently open. So there'll be an X right next to it, and so that actually shows you the markets that are available. So you can trade the S&P 500, you can trade the NASDAQ, you can trade the Dow, you can trade the Russell, you can also trade the FTSE. If you haven't tried that before, it's a pretty good thing to trade. DAX is one of my favorite international indices that you can trade. You can go in and you can trade the Nikkei 225. That's a little bit more, just so you know. You're going to have to get a data feed. It's going to cost a little bit more. A lot of traders want to trade that because it's moving at night, and the thing does move. It moves really well. It has some wild volatility going on. So a lot of trading opportunities there. But you do got to go through a couple extra steps to get it. We do have those steps on our website if you are interested in doing it. Also, there's natural gas and crude oil. So that's the CL contract. We got gold, silver, and copper, so you can trade the metals. As far as the ags, which are, their liquidities in the morning. They're open in the morning there, corn and soybeans. And then you got Aussie dollar, euro dollar, pound dollar. And then, dollar yen, pound yen, euro yen, dollar franc, dollar CAD, and Nadex recently here in the last couple months added Aussie yen and euro pound. So you have a lot of contracts you can trade. Now, one of the things is, what necessarily do you want to trade, what's available, because not just what's open. If I go and look at the S&P right now, I'm going to find out real quick that the only expirations available at this moment are the ones that expire in 20 hours, or the ones that expire at the end of the week. Because they have daily contracts until 8 a.m., which is when the intraday contracts start up. So what's an easy way to know all the contracts that are available? Well, you're going to go up here, go to the scanner, and actually have an expiration schedule that you can click on. And I list all the markets, and it's pretty simple. So you can go in there, you can zoom in on it, on your computer, it'll be a little easier to read. But the orange ones are basically intraday binaries, meaning they start 2 hours before. So if you're trading at night, then you can see where the expirations are at. You got basically the Japan 225, and you got these currency pairs right here that are available now. And now we got to add on euro yen to that list too. So since they added that to the nighttime expirations. But you can go down and you can see all the different expirations available to know, hey, what should I maybe focus on if I'm trading at night? Or in the afternoon, well, just about everything's available. Ags are pretty light. There's only one expiration. Okay, and that sort of reflects the market. Those are not very liquid futures either. So this just lets you know what's available to trade. If you're a nighttime trader, you're probably going to be focusing on Forex. That's when, the Asian market's moving, Australian market's moving. That's why you got US yen, you got pound, pound dollar actually still has some volatility. Pound just has a habit of being volatile. Aussie dollar, Like I said, they have euro yen is what we need to add to this list now. So euro yen has the yen in it. Euro dollar, pretty flat pair. So not a whole lot of activity at night usually. Every once in a while, but not usually. And, be aware of what news is out. What's going to move? We'll look at the news. And so you can go over here. We have a news trading plan that'll help you out on that. And even if you're not trading the news, if you just know what news is coming out, it can be really helpful. So we're talking about over here, like the Aussie dollar. They got retail sales coming out tonight. They have the Aussie dollar cash rate, the interest rates coming out tonight. The pound PMI, that's going to be coming out tomorrow morning. And so there's all those little pieces of understanding it. If you want to see an actual Forex calendar, there's a lot of them out there. We feed a couple of them into our website. That'll help you sort of see what's moving when you're trading, because news does move the market. Again, I'm not saying necessarily you are trading the news. You can. But just to know, if you want some volatility, or if you don't, helps you know what to focus on. All right, so now we know what markets are available, and you can see when they're available. But what are they? What is a binary? Let me just break it right down to it. What is it? A binary at its most basic definition. Okay, the most basic definition. We'll look at, let's say, U.S. yen. A binary at its most basic definition is a true or false statement. Okay, which means either the statement. What is the statement going to be true or false? So let's look at it. Let's zoom in over here. So if the contract says the U.S. yen will be greater than 102.49 at 9 p.m. Okay? Is that statement true or false? Now, again, this is the most basic definition. You don't have to wait till 9 o'clock. The price will change between now and 9 o'clock. Okay? So it's the most basic definition. Well, if I thought that statement was going to be true, and we'll step into more advanced, reasons for doing trades. But just to make it really simple, if I thought the statement that the U.S. yen was going to be greater than 102.49 at 9 o'clock, I could buy this binary contract. To buy it, I just go over here and click this right here. And that's a great question. Mario says, hey, what time zone is that? It's everything in Nadex is listed as Eastern time. So one of the tips that I use is I actually I don't live in Eastern time zone. I live in Texas. But I set my computer clock to Eastern time. So that way all my charts are in Eastern time, and so I don't make a mistake by looking at the wrong expiration and thinking I have an hour or I don't have an hour and making a mistake. So yeah, everything is in Eastern time. Great question, Mario. So the US will be greater than 102 49 at 9 p.m. Eastern time today, so June 2nd. And if I buy that, I'm saying that'll be true. So if I'm right, I will be profitable on the trade. If I'm wrong, obviously I won't be profitable. It'd be a losing trade. And that's if I just bought it and held it. I don't condone buying and holding, but just so you understand, if you just did the most basic thing, that's what would happen. Now again, to open that ticket, I just clicked on the right side and it automatically says buy. Notice if I click on the left side here, it automatically says sell. Okay? So I can buy at the offer. I can sell at the bid. Okay? So if you try to buy at the bid, you're probably not going to get filled. At least not right away. You're definitely not going to get filled. So looking at this, and let me change this to a default because it sort of keeps popping up as 2. And I'll show you, this is a good thing for you to know. Under settings, you can go to personal, go to preferences. And, I need to do this in a different browser. Okay, well, and under your my account settings preferences, you can change that to default to 1. Okay? All right, if I buy this contract, when I buy, the price that I buy for, okay? So yeah, you buy at the offer and you sell at the bid. That is right, Richard. Yep. So that if you want to get filled right now, that's what you would do. So when I buy a contract, the price I buy it for is my risk. When I buy, big emphasis there, when I buy a contract, the price I buy it for is the risk. Okay, so what does that mean? Well, if I buy it for $14.50, what is my risk on the trade, on one contract? It's a real easy answer. All right, there we go. All right, so interactive, yeah, there we go. All right, I want to see a few people come in and post a reply. Make sure you're there. All right, so $14.50 is my risk. Now, every binary contract on a single contract, you can do 1, you can do 100, you can do several hundred, okay? And that's a bigger topic. But just to focus on what's on the screen, if I bought it at $14.50 is my risk, every binary contract is worth $100. That is the maximum value it will get to, okay? So if I bought it for, I know the price is changing, but if I bought it for $14.50 and the max value is 100, what would be the maximum profit I could make on the contract? If I bought it for $14.50 and the highest it could go is 100, what would be my max profit potential on the trade? There we go. Awesome. Yeah. So good job, Daniel, Robert, yeah, Richard. Let's see here. There we go. Thomas, Harold. All right. $85.50. Exactly. Because it's $100 minus my risk. Now, if I open up the ticket and I put in a quantity, it'll tell me max loss, and max profit. So, pretty simple. Works pretty easy right there. But just so you know exactly how that works, where does that P&L come from? Basically just how if you put it all together, what does it mean? So, if I buy it for 15, my risk is 15, the most I can make is 85. All right, everybody clear on that? On the buy side, if I bought it and I held it, that's the most I could make. All right. Now, let's talk about what if I bought it for $84 or $83? We'll make it even. We'll just make it easy. What if I bought it for $80? Okay. If I bought it for $80 and I just did one contract, the most I could make on the contract would be how much? How much could I make on a contract if I bought it for $80? Yeah, $20. $100 minus 80. Perfect. And then what would be my risk if I bought it for $80? $80. Okay? Exactly. So, putting those pieces together, you understand when I buy a contract, the price I buy for is my maximum risk. And the most I can make is $100 less that. And that's if I held to expiration. Okay? Now, I can get in and I can get out before expiration. As you've noticed on these contracts that I put up, I mean, this one right here, we started at 14, 15, 16, we've seen it up to 18. I can get in and out of the trade. So, you have your choice, to hold on to it or to get out. And I want to bring up sort of an interesting concept of how binaries work for you. A binary price is very similar to, I could go real advanced to go into delta, I'm not going to talk about that, but it's basically like probability, okay? The price is very reflective of the probability that it will expire, not that it will touch, but that it will expire in the money. So, remember, what is in the money? Let's talk about what in the money is, make sure you got that down. If I buy the contract, in the money means that the statement is true. The U.S. yen is greater than 102.49 at 9 o'clock Eastern Time. So what if it's at 102.491? Would that be in the money? So if I bought this right now for $13.50, and the U.S. yen at 9 o'clock expired at 102.491, would that be in the money? Yes. So I'd get maximum payout. What if it expired at 102.49? Would it be in the money? No. Okay, so just 1/10 of a tick. Okay? Just has to be just barely in there. Okay? That's that Nadex indicative settlement price. Now, I'm looking at a real chart while I'm trading it. I care about that indicative when I get close to expiration. Okay? And they actually post it right in there for you, which is very helpful. And so that lets you know what is that indicative index. And that's really helpful because, right, that's what's determining whether you're in the money. On spreads, not as big of a deal. A dollar is a dollar. A tick is a dollar. On binaries, 1/10 of a tick can mean a win or a loss. They take on futures contracts. So that's like your indices, your commodities. If they take the last 25 trades that happened, pardon me, they average the middle 15, and that's the indicative price. And that's what they use for settlement. Now, this is not the official settlement number. It's on the web. It's going to have little web, ping delay, all that stuff. But, so you understand where it's coming from. On Forex, they take like the last 25 non-sequential mid-quotes, which is, the reason is Forex can have really wide bid-ask spreads. It can vary a lot, so it'd really throw the pricing off. They use the bid or offer, or even last, because last could be at the bid or last could be at the offer. So they use the middle quote, and they don't use sequentials because you can get 1,000 sequentials like in a millisecond. So they don't use the sequential one. So basically 25 unique quotes, middle 15, that's how they figure out what the indicative index is. You don't get to get all into it. I mean, it's not that hard of a lesson. We can spend 15 minutes on it. You can have it backwards and forwards. We actually have it in that Nadex education course. But just understand that this is the price that matters as of expiration. Okay? And really, this isn't even the official price that matters. You'll get it in your email instantly. If you held the thing, it'll tell you what it settles at. Now, if I bought this contract and I held it all the way till expiration, and it was greater than 102.49, it would say settlement payout $100. Did I make $100? If it says settlement payout is $100. Now, what I make on the trade? If I bought it for $15, yeah, $85, exactly. So if I buy it for $15 and says settlement payout is $100, they're returning my $15 risk and the $85 profit I made. Because remember I said you can't get a margin call, so whatever your risk was, you put that money up. That $15 will come out of your account. And then if it expired in the money, they'll return the $15, plus they'll also, in addition, $85 from whoever was on the other side of the trade. They'll put that money into your account as well. So the $100 settlement payout is not your profit, okay? You'd have to calculate the difference or look at your account statement tab to see what the difference was, if you don't remember, to know what your profit was. Or just, look at your balance. So take a before and after screenshot. So if I bought it for $15, it expired at $85, settlement payout $100, I made $85. Okay? And I got my $15 back also. I didn't just get $85, I got the $15 back. Now, obviously, I have fees as well. So you don't have broker fees. There's no brokers. You're not going through a broker. You're going direct to the exchange. And you're not trading against the exchange. The exchange is not trading against you. Okay? You're trading against other traders. That may be a market maker who is also a trading member of the exchange. And basically, a market maker is just somebody who has obligated themselves to making a market on all the contracts listed that they're contractually obligated to, making sure there is liquidity here, or other traders. So, for example, I can go in, and if I want to show you a trade inside the market here, I could put in a buy for $12, or I'll make it a little lower, for 11 there, and you'll see all of a sudden my order right there. So somebody could go in right now on demo, and they could fill that order. All right, they could do a sell for $11 if they wanted to. So you're trading against other traders, you're trading against market makers, you're not trading against the exchange. So both sides are having to collateralize their contracts. Now your fees that you do pay, again, you don't pay broker fees, you just pay exchange fees. And if you trade CME, you're paying exchange fees, broker fees, clearing fees, whatever. So you just pay just the exchange fee. The exchange fees are at 90 cents a contract per side. They cap at $9 though. So if I do 100 contracts, what is my fee? How much? Like if I did 100, if I went in here and I went and bought 100 contracts right here, what would my fee be to do the trade? $9. If I did 10, what would be my fee? Right. If I did 9, what would be my fee? Everybody's like, let me do the math real quick. So 9 times 8. $8.10. There you go. Yep. So right there, yeah. And there is a fee, Daniel. I'm just saying there's not a broker fee. There's not a clearing fee. There's just the exchange fee. You don't have all the other fees on top of that. And it does cap out. Can more than one trader buy the same contract? Yes. It happens all day long. All the time. We're doing it in our rooms half the time. I mean, we have trading rooms. We're trading binaries. We're trading spreads. So all the time, traders are buying and selling the exact same contracts. Yes. I'm guessing that's what you're asking. So, in other words, if you wanted to buy this and I wanted to buy this, we could both buy it. Now, how many contracts can I buy? This is not volume. Volume is what has been traded. Okay? It's not open interest. Open interest is like how many contracts are out there versus, you know, like net, open, long, short, all this stuff. This is simply current liquidity. Okay? So I can get its current liquidity at the best price. Notice again, like if I go back over here and I change this to $11, watch what's going to happen on the left side over here. Okay? If I go do that, change this to 1, so you can really see the difference there. Notice how when I put this order in, it shows 1. It doesn't mean the liquidity is 1. That's the liquidity of the best price that's available. If you click on the ticket, you can actually see that there are 100 contracts available at $6.50. Okay? So you can see 3 levels deep on the liquidity. And you're not really going to see liquidity depth beyond maybe some other demo traders inside the demo because there's not market makers. It's just a automated program. Okay, it's made to reflect the market until demo traders come in and start messing with it. So if you want to see the liquidity, the depth, especially during the day, then you're going to hop into a live account. And a live account is actually where you can see, you know, liquidity, depth, more than one level, you know, stuff like that. Like you'll put in trades, there'll be maybe 120 contracts available instead of just 100. Maybe there's one market maker making 20 contracts on US yen, for instance. And let's see, maybe I can find an example. Yeah, here we go. Okay. So if I pull this up here and I click on one of these contracts, notice how there's 50 on this level and 20 on this level on the 3 a.m.s. Or if I go to the 9 o'clocks, there's 20 and 100. So this market maker is actually bidding tighter. So they're going back and forth. They're competing for that volume. Okay? And right there. So does that make sense? All right. So any questions so far just on the basics of buying and selling or buying a contract to enter and what the value is and what the liquidity is? Because that's just the best price, how many contracts are available at the best price. Any questions so far? What happens when you go past 100? It doesn't go past 100. When it hits 100, it's at 100. Okay, it's the highest it can go is 100. The lowest it can go is 0. And this is actually one of the big advantages. Which, I mean, if you think about that, people go, man, so I'm capped at 100? If you could buy a stock for $15 and in the next 2 hours that thing could be worth $100, would that not be an incredible thing to be able to trade? And have that all the time, where there's stocks that are going from 15 to 100 all throughout the day. Okay, so that's an incredible return on that. Okay? So yeah. So it can't go past 100. Now, what happens if it goes... That's just going to be the price changing. Now, if I'm looking at an actual chart, okay, and let's just say the US yen goes way against me. Like right now it's at 102.40. Let's say it goes down to 102.20. What's the most I can lose on this trade? Yeah, $15. Sorry, I'm opening up something over here. Let me bring that back on top of the screen. There we go. Most I can lose is $15. $15, not 30. Well, 2 if I had 2 of them is 30. But on one contract at $15, the most I can lose per contract is 15. Okay, so that's the most I can lose. No matter how far it goes against me. Am I out of the trade if the market goes down? If it goes against me, am I stopped out of the trade? Do I have to exit? No, so I don't have to have a stop loss. You know, on this is an out, what's called an out of the money binary. We'll talk about that. Don't have to have a stop loss on it. So the market can go down against me and then come back in my favor. Any of you have traded before, you've had that happen a few times, right? Markets went against you and then came back and you were right. Okay? So, you know, pretty simple, but just to understand the basic concept there. Now, if it flew up to 102, let's say, I mean, US yen just took off and it's like at 103.50, okay? Am I going to make more than $85 on the trade? for just that one trade. No. Now, could I buy more contracts? Could I buy higher strikes? Are there other things that I could do? Yeah. Okay. So it's not like I'm capped on my ability to go make money. It's just there is a cap on the profit and a cap on the loss, and I don't have to use a stop loss. Charles, not exactly sure what you're looking for. All right. So basically, that's how buying a binary works. Now, I can get out of the contract. We've seen this price fluctuate quite a bit. So I could go in here and we'll just put an order in, okay? Just randomly buying here. So there's not the way to trade. This is just demo. So if I bought the contract, by the way, what I did was I clicked on the buy side over here. Okay, the right side is the buy side. It said buy. I said the number I wanted to buy at and the price. Okay? That, and then I hit place order and got filled. When I buy, I'm buying with a limit order. Okay? A limit order, it means that's my limit. I will not pay any more than this price, whatever price it is you put in. So if you put in, $17, I will not pay a penny more than $17. I'll pay 17 or less, but I won't pay any more than $17. If I sell, and I was doing a limit, let's say I said I'll sell it if it gets to 50. That means I'll sell it, but I won't sell it for a penny less than $50. Okay? So, let's see here. So if I go in and I put, $15.50 or whatever, say what did I buy this contract at? Let's look at it. I bought it for $16.50. So if I went in and now I put in an order to sell. Now, how did I do that? I just clicked the little green thing right next to the open positions. I'm going to put an order in to sell for $50. I'm going to hit place order. Now, am I going to get filled on this order when I submit it? If I try to sell the thing at $50, do you think they're going to fill me right now? No. Okay? So, right, because it's like, that'd be awesome if they would. But it'll go to a working order, because I said I'll sell for $50, no less. Well, the market's not at 50. They're like, well, we'll sell it to you for $6.50. I'm like, I'm not taking $6.50. I'm only taking $50. So they're like, well, you're going to have to wait till the market gets there. So the market moves up, it'll fill me. Until then, it's going to go into working orders. A lot of people are like, why are my orders never getting filled? Well, you're putting in an order to sell above the market. You're putting in an order to buy below the market. If I go in and said, well, I'll buy this, but I want to buy it for, $5. Am I going to get filled? No. It's going to go into working orders because the market's at $17.50. Nobody, if it's worth $17.50, nobody's going to sell it to me for $5. Okay? So, now, what if I went in, okay, and we'll choose a different contract. We'll leave that one alone for a moment. What if I went in and said, I will buy this for $20. Would I get filled immediately, or would it go into working orders? What would happen? Yeah, I'll get filled right away. Okay? So if you want a really fast fill, put it in. Now, what price will I get filled at? Will I get filled at 20 or will I get filled at $16.50? If I put an order in to buy at 20, what will I get filled at? So I'll get filled at whatever the best price is, because when I say limit, I say this price or better. Whatever the best price being quoted at that millisecond is, okay, is what I'm going to get filled at when I press that button. So if I submit it right now for 20 and it's at $16.50, okay, now I got two of them at $16.50. I can even go over here and I can look at my order history, and it'll show me you sent an order in to buy it at 20, but you said, hey, 20 or less. The market was at less, so you got filled at $16.50. Okay? So if I try to buy above the market, it's going to fill me immediately. It's a limit order, this price or better. If I try to sell below the market, it's going to fill me immediately because I'm saying this price or higher. That's how a limit order works on every market. Every market. Okay? So same thing on futures, Forex, stocks. That's a limit order. So there's stop limits. That's a different kind of order. But every contract on Nadex is a limit order. Okay, so if you try to buy above the market, you're going to get filled right away. So don't try to buy above the market unless you want to get filled right away. And you get filled at the best price. Why might someone want to go in and put an order in to buy at $20. What would be a benefit of doing that? How would that maybe help you? Yeah, market's moving, right? I mean, what if the thing's at 17? And so, like, I see that hit 17. By the way, you can always update it to the current market price by clicking it. Now, if I click the left side, it's going to be 850. I'm not going to get filled, right? But if it's at 17 like it was a second ago, and I click place order, all of a sudden the market's at 18. I'm not getting filled. Now my order's working. It's fill or reveal, which means either they got to fill me or they got to show the world my order. Okay, at least in the depth there. And so now it's working to see if the market oscillates and somebody, you know, fills my order, the market maker fills me, or another trader fills me at that 17. Okay? So we got orders. What do we got working down here? All right. So we got filled. Got in, got filled at, you know, whatever price. Order sent for 17, bought at $17. Okay? So, no, I'm just talking about buys right now. We'll go into sells in a second. Make sure you have the buy side down, and then we'll make sure you have the sell side down, okay? So you can sell first, too. We'll get into that. I just don't want to make it confusing. I'm trying to make it, you know, binaries made easy. Okay? So if the contract has a breakout, I'm guessing you mean the underlying, Daniel, has a breakout and the market's moving really fast, like US yen takes off, right? So it's not the contract that has a breakout because it's a derivative. Its price is derived from the underlying market. If it has a breakout and it takes off, and it goes way past your purchase price, can you just grab the profits? Yes. So, for fun, all right, what we'll do over here is, let's say we haven't put anything in yet, and just pretend with me for a second here, okay? So that way I can give you the example, because otherwise we have to wait for the market to move. But let's just say we bought this thing, act like the average price was $5, okay? Or, you know, whatever. Let's say bought it for $5. Now the market's up at $8.50. If I want to get out, I can just click right there, click on the current market price, hit place order, and out of the trade. Done. So if I bought it for 17, it flies up to 40 or 50 or 80 or 90. Yes, I can just get out right away. Okay? So Brian asked a question. Why do you start out negative? Okay, in all trading, all right, you start out negative. It's called a zero-sum game. Basically what that is, you're going to have commission or fees. In this case, you just have an exchange fee. The second thing is you have what's called bid-offer spread. Okay? So the difference between the bid and the offer. So right there, that difference, if I want to get in right now, I can get in at $17.50. I'm in. If I want to get out right now, I got to get out at $8.50 because that's the best price I can sell for at the market. Okay? So the market does have to move. Now, binaries move very fast. Very, very fast. So, I mean, right now we're not in a stage where they move fast, but they move very fast. We can go over here and I can actually look at a binary chart and show you the price will, I mean, it'll fly all around. So, this thing's moved from $12 to $26, right? Over and over. If we go look at, we'll stick it on, say, you know, bid right there. 8 up to 29 right now, 31, moving up and down. Look at the ask or the offer, same thing, 31.50. So it's been at 16. Right now it's up at 31. And that's just on, those are 30-minute bars. We can narrow this thing down. Let's go down to like 5-minute bars. Get rid of that. This thing is at $16. It's up at like $36. Okay? Here just in the last 15 minutes, this thing has more than doubled in price. It can easily overcome that bid-offer spread. Yep. All right, so I'm not talking about so much, Lorenzo, why to choose a binary contract at this moment in the training. I'm more focusing on just how to buy and sell a binary contract. So it wasn't so much that I'm choosing the 102.49 or the 102.34 or whatever. I'm just showing you how to do it, okay? So obviously this is a demo account. I'm just explaining how they work. So I have a lot of training on exactly what to choose and why to choose it. But this right here is just how to do it. Because it doesn't matter what you want to choose if you don't know how to execute the contract. Okay, so we got that contract in, we bought it, you know, whatever. You know, $9 on that contract. That's the 102.49. So we go in there and we could set a take profit if we want to. We'll just set one in there for, we get in for $9. We'll set a take profit to get out if the price gets to 18. And now that'll work for us until expiration, which is at 9 o'clock. If it gets filled, I'm out of the trade. It's done. money's instantly put back into my account, move on. Okay? If I hold to expiration, it settles, and then as soon as settlement's done, usually within, seconds, then money's put right back into my account. Okay? But Brian, do you understand the whole difference of bid offer and why you start out negative on any trade you do, no matter what you're trading, stocks, forex, futures, whatever? A lot of people they trade on these bucket shop binaries, and they're like, we don't have any bid offer spreads, so it doesn't appear that you're starting off negative. Well, when they have payouts of 70% or 80%, okay, that means it sounds really good. 70, 80%, that's amazing. No, it's not. That means that the best thing that can happen on a 50-50 trade, and it's really not 50-50 because if it's a tie, they push the money back out. So it's like sort of the green things on roulette makes it where it's not a 50-50 on black or red. So it's not even 50-50 at these places. And I'm not considering Nadex to that, but I consider these overseas, I'll compare them to that. It's not 50-50 on the trade. And they're paying you out $8 for every $10 you put at risk. That means if I am profitable on the trade, I'm still down $2 on my 1-to-1 trade. If I'm not profitable on the trade, I'm down all 10. So no matter what, I'm down 20. Right? So you got to look at that reality of what's my payout, because the difference between what they're paying me and the payout on a 50-50, which should be 1-to-1, okay? That's the actual bid offer spread. So there is bid offer spread there. It's just hidden inside the way that they build their contracts. So Nadex, however, not an issue. You can see it up front. I mean, you can do 1900% returns. You can do 3% return trades. So it all depends on what kind of strategy you're trying to do, what kind of probabilities you want to put in your favor. So to answer your question, Lorenzo, isn't the probability of the 102.34 contract more likely to close in the money? Yes, because it's already in the money. So that's a good topic. We'll talk, hit that real quick. So why would you choose the 102.49 with this more probable contract? Well, if I bought this contract right now, I could make $2.50. I have $1.80 in fees, so I'm going to make about 70 cents on a $97.50 risk. Not really good. Like, it may work. It may work a lot for you. And then when it doesn't, it'll wipe out the last 50 or 100 trades you just did. So you got to balance your probability and your profitability. I trade in the money contracts all the time. Okay? Now, what is an in the money contract? The easiest way I can put it for you is if the market were to expire right now, you'd be profitable. Okay? Like the market's already greater than 102.34. So if the market expired at this second, this trade would be profitable. Okay? Same thing if I go down here. 102.39, the market's at 102.43. Market expired right now, I'd be profitable. By the way, we just did our take profit on the trade. So, anyway, so does that make sense? In the money? So in the money is, if I was at expiration at this second, would this trade be profitable? That means I'm already in the money. So the cool thing about that is if I buy a contract, all right, and the market moves, if it's already in the money, like 102.39 here, if US yen goes up, will I be profitable at expiration? So we can look at the 102.44. It's barely in the money. We'll come back to that in a second. So 102.39. If I buy the US yen 102.39, the market's at 102.44. If the market goes up, will I be profitable as of expiration? Yes. If the market goes... What about if the market stays flat? What if the US yen just dies off and doesn't do anything? What will happen? Will I be profitable? Yeah. So the market goes up, I'm profitable. Market stays flat, I'm profitable. What if it goes down by, say, like 4 ticks? Expires at 102.40. Goes against me. Will I still be profitable? So the market's at 102.44, goes down to 102.40. Yeah. So it could go up, it could stay flat, it could even go against me some, and I could be profitable. So, yep, Lorenzo, if it expires at 102.40, and I bought the 102.39, then I would be profitable. Meaning it could go against me, and I could still make money as of expiration. Okay? So again, I'm talking about as of expiration. So that's the benefit to an in-the-money contract is basically 3 out of those 4 scenarios. And Now, it could go way against you if you stayed in. It could come back and still be profitable, but you're increasing your risk a lot, right? $85, getting pretty risky. You're risking 85 to make 15 or make 20. Okay? So I'm starting off profitable in the money. Okay? So what happens if it goes to 102.38? Well, would the statement be true? If it expired at, and I guess that's what you're asking, Brian. What happens if it expires at 102.38? Well, if I bought it, I said it would be greater than 102.39. So you tell me. If it expired at 102.38 and I bought the greater than 102.39 contract, would I be profitable? So is that a yes or no? If I bought it and it expired less than the number I said it'd be greater than, exactly. So it would not be profitable. It would be a losing trade. Okay. Now, if it went down to 102.39 or 38 or 37 or 36, that doesn't mean my trade's over unless I decide to get out of the trade. Okay. But if it expired there, if it expired at or below 102.39, the trade would lose. Okay. So the beautiful thing is, stay flat, go up, go down a little bit against you. You still make some money. But the bad thing is, you're risking more because you're in the money. Your probability's higher, right? Because it doesn't have to do anything and you make money. Your preference is either it goes up or it stays there. Now, I can go out of the money, which means the market now has to move. Right? It's not in the money yet. Meaning if it expired right now, 102.44, and I bought the 102.49, it's not greater than 102.49. So the market just expired at this moment, I wouldn't be in the money. I'd be out of the money. So the trade would lose. Okay? So if the market stays flat, it'll lose. If the market goes down, or stays down, let's put it that way, it'll lose. If it goes up by 4 ticks, let's say to 102.49, okay? It's not greater than 102.49. It's equal to, but not greater than. It has to be greater than. It would lose as of expiration. But if it's greater than 102.49, then I could risk $33 and I could make, on a single contract, I could make 67. Okay? So it's balancing risk, it's balancing probability and profitability and what your trade strategy is. So it all depends upon how you're trading, what you're trying to do. Like this one, you're risking, on one, you're risking more money. Now you can cap that. Okay, you can get out if it hits the strike. We'll talk about that. You don't have to take on the full risk. I mean, you have the full exposure, but you don't have to hold the thing. You can get out. All right, so just like if I bought a trade that was going against, like in my favor, I could get out. If I buy something and it's going against me, I can get out. But the US yen, if I buy this, my risk is now movement. The market has to move and expire, if I held it, has to move greater than 102.49 and expire greater than that for me to be profitable. It can't stay flat. It can't move down. It can't move up just a little bit. It has to move up enough to be greater than 102.49. So you got risk either way. I mean, that's why it's trading. It's investing. There is risk involved. Okay? So it doesn't matter what you're trading. It all works the same way. The advantage here is you can actually increase your profit on a small move by going out of the money, or you could increase your probability where the market doesn't have to move by going in the money. Okay? And you just need to have the right strategy for that. Like I may go in and do, strangles, which is where I buy one below and sell one above. Like one down here and buy one up here so the market goes in either way, but it has to move far enough. So I do them like around news, right? Now you have what's called at the money. And this is something that Lorenzo brought up. He said, so at the 102.44, that's in the money. Is that highly profitable? It's basically it's at the money. It's right where the market is. And it's really a perfect example of probably one of the most important things you can learn when trading Nadex binaries. It's what I call basically the biggest edge in trading them. And it's basically the one thing you can count on, okay? You can count on it being worth 0 or 100 at expiration, okay? And you can count on it being worth 50. Now, we'll talk about bid-ask in a second. But you can count on it being worth 50 when the market's trading right at that price. So, like the average of the bid offer being about $50 if it's right at the center, okay? We can go over here and we can watch it and it'll move up and down a little bit and, pretty much be right in the center of that. See if we get it right here. If it'll move down just a little bit more, then we get a really balanced one. But you can always count on it being $50. So what does that do for? There we go. We're pretty much right in the center right there. Okay. Pretty close. So now I have my bid offer spread, but if I take the mid price, if I take these two and I add them together and then I divide them by 2, okay, my mid price is right about $50. Okay. Why would the price be $50 if the U.S. yen was trading at 102.44? Why is that? Why does that even happen? Remember what I said about the price is reflective of the probability of it expiring in the money? So if it's at 102.44, there's basically a 50-50 probability that it's going to be in the money or out of the money, right? So that's why the price is $50. And this is really cool. It doesn't matter if there's 5 days until expiration, if there's 5 hours until expiration, if there's 5 minutes until expiration. If the market's trading right at the indicatives, right there at the strike, it's going to be worth 50. So what are some of the things I could do? Let's say you're trading and you get a buy signal, okay? And when you get that buy signal, it tells you, go long for, whatever reason, okay? And I could go into systems. I don't want to make it more complex. But let's say you think that, hitting 102.49 is a pretty realistic probability, okay? It's not that far. We're talking 5 ticks, all right? So do you have to hold on to the thing until 9 o'clock and see if it actually stays up there? Let's say it does fly up to 102.49, 102.50. No. Okay, this is probably one of the biggest mistakes. We'll talk about this even more next week, but one of the biggest mistakes binary traders make is they buy and they hold till expiration. I see guys come out and they try to do all these things and random signal providers and all sorts of stuff, and you see them holding everything. And I'm like, they won't last. So you don't hold till expiration. It's a probability. If I every day at 9 p.m. I bought a $20 binary, I should basically be profitable 20% of the time, which means 2 trades I'm going to make $80, and 8 trades I'm going to lose 20, which means I'm going to be break even at best. Okay, because it's a probability. So, but what if I went in and I bought this contract for $22, or $21, or whatever I end up getting filled at there? And now so I got filled at, we'll see, what did I get? 21.50. Okay? And, I bought a few of them. Let's get rid of 2 of them to make the example easier. Here we go. All right. All right, so I'm in at $12 on the trade. Or $21 on the trade. Now, what did I say the price would be worth if the market actually got up to 102.49? What will that binary be worth if the US yen gets up to 102.49? $50. Okay. Now, is there a bid offer spread, or is it just one simple number? So yeah, so there's a bid offer spread. So this is where I have a rule. I call it the 43-57 rule, and it's really bigger than it needs to be. But what if the thing gets to like 102.48, right? And then it goes back. I mean, do you really want to take the hit? So what I'll do is I'll go in and I'll buy if I'm targeting a strike, and I have I'll do this with deviations. I'll do it with magnet prices. We have a lot of strategies we teach. But if I go and I'm targeting a strike, and then I'll put an order to sell at 43. So if I think it's going to hit 102.49 or get really close, a gap fill trade, things like that, I'll sell at 43. Okay, so I put my order in there. Now I got a sell limit order working for me. Okay, so if I bought the contract at 21.50 and the market gets up to 43, how much will I make on the trade? What would be my profit if I bought at 21.50 and I sold at 43? Would I lose? Would I make money? If I would make money, how much would I make? If I lost, how much would I lose? There you go. Yep, Daniel got it first. So if I bought at 21.50 and I sold at 43, and by the way, don't be afraid to use a calculator. So I use one often. If you watch my radio show, you'll see like 30 calculators up on the screen sometimes. But it's sort of funny. People like they want to do it all in their head and show how smart they are. And one of the best analogies I can give you for that is, when you go to a restaurant and you have that waiter that wants to show you just how good of a waiter they are, and so they memorize your entire order versus writing it down. Now, we've all had those. I had one this last week, right? And have you really ever tipped anybody another $1 because they didn't write it down? Okay? Have you ever done that? No. I mean, you don't care. It's like, I have tipped people less money because they got my order wrong, especially when they didn't write it down. Okay? Take the time to write it down. It's worth it. All you're sitting there is going, man, I hope they got my order right. Okay? Get your math right. Pull up your calculator. I don't care if you got a physical one or you want to use the one on your computer or whatever it is that you're going to do, but use your calculator. Okay? It's just not worth not doing. So, there you go. So, it wouldn't be $78.50, Thomas. Remember, I bought it at $21.50. I sold it at $43. So, you tell me what the profit is. So, it's real simple. Just take 43 minus $21.50. So, and you'll know. There you go. Yeah. So, it's $21.50. Exactly. So, if I bought it for $21.50, I sold it for $43, I'd actually make $21.50. What kind of return is that on my risk and my investment? How much am I making on that trade? Like your percent return on investment. What is it? So, exactly. It's 100%. So, we can get into fees, but, I mean, if I flip 100 contracts, I don't really care about fees. Because now it's 9 cents, right? So, your fees become less. Don't worry about, it sounds funny, but we all read these books, these trading books that talk about fees, and they were written back in like the 80s and the early 90s, whenever it was like $25 to do a trade. Okay? I talked to a trader about this today. It's pretty funny, and he was, we were going back and forth, and he was talking about, but how do I get this for free? And I was like, dude, it's like $60, And we're talking about making, the trade volume size we're talking about, that's less than 10 ticks, okay? And he's like, it's basically like worrying about, what's the price of gasoline when you're driving an electric car. Like, you just don't care. So, when you're making 100%, you don't really care about the 90 cents, okay? And that's in a, 4 or 5 tick move. That's not in some massive, massive move. That's return on investment, return on risk in a 4 or 5 tick move. So, all right, so a question comes up, a really good question. So what if I go long on one contract, okay, but there's no one willing to cover the position? Well, you're the one covering because you're getting out of it. They may be getting in or covering. But do I have to wait till expiration and possibly lose all my money? Well, if that happened, yes. That's all of trading. What if nobody's willing to sell you a stock? Or an option or whatever. That's how all trading works. But, again, that's why you have market makers. You have liquidity providers. So they're making those markets so that way, because obviously you're not going to trade on Nadex very long if you can't get out of contracts, right? Who would trade somewhere where they're going to get in, but they get stuck, okay? Now, do you want to out-trade the market? If there's 100 contracts in there, do I want to go in and try to do 300? Probably not unless you have a lot of experience. But when you're doing a single contract, you really shouldn't have an issue. Even way out here, there's 5, okay? I'd say getting stuck is really rare, unless you're out-trading the market. So, very, very rare. I'm able to get out all the time. It's not an issue. So, you'll find out really quick. But, if that was an issue, Nadex would have bigger issues. So the whole point of having liquidity providers is to have markets. So there's multiple levels, 3 levels on this side, 2 on that side. Now, I will teach you a trick, okay? Something that I've learned is, let's look at this US yen right here. Let's dig into this. Let me show you something. If we go in here, look at what the bid-ask spread is. It's about $8 or whatever right now on these contracts, okay? Now, why is that bid-ask spread there? Why is that bid-offer spread there? It's there because the market maker, the person taking the other side, they have to try to unload that contract to somebody else. They're trying to buy at the bid and sell at the offer. That's what a market maker is doing. Okay, they're buying when you're selling. They're selling when you're buying. They got to get rid of that contract, and they don't really want to trade against you. They want to be what's called delta neutral. Okay, they want to have equal longs and shorts, and they're just making the middle. Okay, they're not there to counter trade against you because that adds a lot of risk. You may be a really good trader. Okay, they want to get rid of it. So understand that. That's why it exists. But if you understand, okay, it's about $8 or so. So if we got $8 on the bid offer spread, if you have an offer at $8, do you think you're going to be able to sell? Like anybody's going to sell a contract for $0? Like would anybody like to sell me a contract for $0? Because I'd be happy to buy it from you for $0, right? So I'd love that. I'll buy them for $0 all day long. Right? Nobody's going to sell it to you for $0. Nobody's going to, is somebody going to want to buy a contract from me for 100? I mean, what can they make? Nothing. Actually, they'll be negative. Market makers pay fees too, by the way. Okay? And they don't get the 10 contract cap. Okay? So, goes up to 100. Nobody's going to buy that from you. So setting a take profit at 100, does that even make sense? Is anybody going to take it? No. You think they're going to take it for a quarter? Just think about the fees. No. They're probably going to want to make at least a few bucks, right? Potentially in the trade. So like they're selling for 8, which means you can buy for 8. Okay? Remember the bid offer spread being about $8. Notice when it gets to 8 right here, or that one got to 850. Look at how all the volume just went away. Wish I had a before and after shot. So we're at 850. So about 850. Notice how there's no liquidity on the left side. That's because nobody's going to, who's going to sell it for $0? Okay? Comes back in, there's a little bit, they'll do 50 cents, which seems crazy to me. I don't know why you would do that, because you'd have to be doing a lot more than 5 contracts to make it worth it to bring your fees down. Okay? So, if you get out before the bid offer spread gets sucked out, okay? Meaning like, how do I put this? Let's say if I sell the contract, I'm going to buy it back. If I want to buy it back by like a certain point where there's actually still a bid offer for there to be liquidity. So I want to buy back, say, maybe at $10 or $15, whatever. So once it gets up, if it gets up a little bit higher, you'll see this pop up to 100. It'll fill up. If it keeps going, we'll see it actually get up a lot higher in liquidity. So you want to get out before that bid offer spread gets taken out, meaning that there's no bid or there's no offer. Does that make sense to everybody? Like nobody's going to sell it to you for $0, buy it for 100. That's why it has a dash there. And if you'll get out before it gets there, then you'll have, you'll be at the 20, 120, etc. type liquidity levels. Okay, now once it's got there and come back in, you have to go up a little bit before that gets refreshed up to 100. All right, so does that answer everybody's questions about that? But yeah, Wendy, you shouldn't, I don't have an issue. If you're trading massive sizes, it gets a little bit more particular, but not really covering that tonight. We'll go through the basics. So we understand you can get in. Let me hop back over to my demo so I don't accidentally place a trade. Not paying attention. You can get in, you can place that trade, and your risk is capped. You can set a take profit. Okay? You can do an in the money, which things are in your favor. Now we talked about taking profit at 50. What if I bought something for, let's find one over here. And back out. There we go. And let's see if we can find something that makes a little more sense for the explanation purposes. Maybe that's a little better. Okay. So just for an example, if I bought this contract, this 102.40 contract, the U.S. yen, actually the U.S. yen's at 102.40. If I bought it, I'm saying the U.S. yen will basically be at or above 102.20 at 11 a.m. tomorrow. Okay? It's already 20 pips above it. So I'm in the money, right? So if the yen stays flat, moves up, it can even move 20 ticks against me, and I can still be profitable. Because it's at 102.402. So it'd be at 102.202. So I'd still be profitable in the trade. All right, so what if the US yen did get down to 102.20? Could I get out of the trade? So I could buy it and I could cap my, like, let's say I got out at, 43 or 57 or, whatever. So if it got on down there, I could get out of the trade. Let's just say I got out at 50 to make it simple. So I, put in at 80. I have an $80 risk on a single contract. Okay, we'll get this down to 1. It goes down to 50. I'm down $30. I could make 20. But again, if it stays flat, moves up, or, moves down up to basically about 20 pips, I could still be profitable. So I have a high probability trade. Now I've brought my risk-reward ratio under control because I'll get out if it hits that price. Okay? So does that make sense? You don't have, just because there's $80 max loss, it's just like just because there's, up here, just because I buy this contract for $10 or $11 and there's, $90 max profit, doesn't mean that I have to hold on to the thing till expiration to make the maximum $90. You got to be very happy buying at 10 and getting out at 50. That's a 400% return on your trade. Be very happy, okay? You don't have to hold on to the thing and get greedy, all right? Also, don't be, foolish and take this thing all the way to zero. Get out of the trade, admit you're wrong, move on, find the next trade. So you can cap your risk is already capped, but you can also cut losses earlier. You can also take profits earlier, so you don't risk having what is a profitable trade turning into a losing trade by holding on to it. What do the flashing prices mean? It just means the price went down or up. So a trade traded, there's a change in price. And sometimes it's like milliseconds. I mean, it's just boom, boom, real quick. But it just lets you know that there's movement happening. You can turn it off if you don't like it under My Account Set Preferences. I like it because it sort of just lets you see what's changing in price. Sometimes it may have changed by like a quarter, like in and out. Like a trade went in, a trade went out, and it was so fast you didn't even see it. So, can you buy the spread and make money? Can you buy the spread? I think I know what you're talking about, John, but I'm not 100% sure. So you're going to have to write out a little more detail what you mean so I can better answer you. Okay? So you're talking about the bid-offer spread. Can you buy at the bid? If you're asking that, well, if you want to be a market maker, you can. Are you talking about spreads? What are you talking about exactly? Okay? And I'll be happy to help you. All right, so I think I've covered. So yes, of course, people can make money trading. They can also lose money trading. People can make livings, and people can lose. So it goes both ways. It just depends upon your skill level. Okay, so Richard asked, if the bid ask is at 6 and 12, I buy at 12. How do I close at 6? Well, like if I go over here and I bought this at 10 and hit buy, it'd be in my open positions. So we go over here to open positions. We did that 102.80 right there. I just click on the little green button next to it and click on the price, 550. Quick place order. So that's all you got to do. Okay? Now, to make this even easier, because of all this little math and everything else you're having to do, all this stuff can also be done in the scanner, which is completely free. Okay? And so let's say I did want to trade the US yen, and let's say I only wanted expirations, and what I tell people is first just figure out what market you want to trade and select it. So like US yen. Here's every single contract for the US yen that's happening this week. Now, maybe I only want ones that expire here in the next, 2 hours. So I can bring this down to 2 hours. And now I'm only going to see the contracts in the next 2 hours. And maybe I only want out of the money contracts. I can choose out of the money, or maybe I can even go up here and I can set this to, I don't want to pay more than $40. Okay? And maybe I'm only looking to buy. I can click buy. And that'll show me the buy contracts that are out of the money that I can choose, and then it'll tell me what the risk is and the reward without me having to open all the tickets up. It'll also tell me what the risk-reward ratio is. And I can just click it and submit it. Very simple. Okay? Also, I could go, which one's the best payout? What if the market moved? I can simulate a range. What if it moved, say up? We'll just say, 10 ticks there. And I click OK. And it'll actually tell me which one will make what, how much will it make, what's the best payout. And I can find, well, this one right here actually makes a 475% return on 1350 if the market moves up, 10 ticks from where it's at right now. It's the highest payout trade I can do out of the next 2 hours. So if it moves that far, quickly, now this is quickly, okay, It's not, if it takes hours to do it because it's an out of the money contract. But it lets me know on price movement, what could I get out of that trade after the market popped up, 10 or 20 ticks. Makes it really easy. So on your open ticket window, if the price gets closer to your target, would the ask offer lower to the 50 point? Yeah, the bid and offer will change. Yeah, so if you bought and the price is going up, then your bid and offer will be basically at 50 with the bid-ask spread in there. So that's why I use the 43-57 rule, right? So I don't know if that's what you're asking, but the price will get to 50 at mid if the market gets there. So can we do the same thing on the short side? Yes, we can. Okay. So on the short side of things, let's go in here and we'll just close this one out so we have all new stuff. Make it even easier. Okay, that one's like worthless now. Okay, so on the short side, what am I doing on a short? Then, let's see here. I'm saying the statement is false, right? If I buy, I'm saying the statement is true. If I sell, so we'll show you sort of going to the scanner here. If I say the statement is false, well, what are the statements? Like USM will be greater than 102.34 at 9 o'clock would be an example. All right, so greater than 102.34, if I don't think it's going to be greater than 102.34, if I think it's going to be equal to or less than, that's big, equal to or less than 102.34, I would sell. Okay? Now, when I sell a contract, let me reset all my filters up here. Let's look at the sell side for a second. When I sell, the price I sell for is my maximum profit. Remember when I bought, the price I bought for was my maximum risk. Okay? So, if I sold for $38, how much could I make? If I sold for 38, I could make 38. There you go. Yep. So if I sold for 92, how much could I make? $92. Yep. If I sold for 95, what can I make? 95, right? So notice right here, you don't even have to figure it out. It actually tells you instantly. Max profit. If I put both sides on up here, and I put both, everything, it'll actually tell me what the profit I could make is. So say, hey, you can make 32.50, 71.50, 92. On the buy side, I can make 12.50. I could lose 12.50 because when I buy, the price I buy for is my risk. So now you don't have to open a ticket. Now you don't have to do all the math in your head, etc. Okay, it's the exact same thing. It's just now it's right in front of you without you having to make it difficult. So that's why I tell people, look at this. They're like, oh, it's advanced. It's really not advanced. It's actually making life really, really simple for you. Okay? So it's doing all the math without you having to even think about it because it's right in front of you. So it's actually easier for a new trader to use this. If they'll start out and they'll take 2 minutes and just look at it, you'll get it down really quick. But so if I sell for 34, I can make 34. Now, what is my max risk if I sell for $34? How much could I lose on a trade? So $66, exactly. Okay? So if I sold for 33, I could lose 67. Notice how it's actually updating that live for me. It's doing all the math for you. Okay? So it's $100, whatever my max profit is. When I sell, my price is my max profit. When I buy, my price is my max risk. Okay? So if I sell and my max profit It's $32. My max risk is $68. It's just $100 minus whatever my max profit potential is. Okay? And Brian, that should work for you. If you'll just log out and log back in. Make sure when you're using it, very important. Okay? A couple questions that came up. Make sure to choose demo or live, whatever you're logged into. So if you're just logged into demo and you have live selected, you're going to need to choose demo. Okay? Otherwise, it's going to say, hey, open your account. 2, if it says open your account and you're already logged in, just go in and log out and log back in. The browser just didn't recognize it. Okay? And you should be good to go. All right. So does everybody understand, like, that's how everybody gets a buy? A sell is just the opposite. So I can go in, I can sell this contract right here. Let me make sure I got demo on. I can sell this contract for $74. And if the market were to get down to, I have to make it a little larger because I'm zooming in here. If the market were to get down to 102.34, right now it's at 102.37. So if the USD were to drop by 9 o'clock, which would be 30 minutes from now, if it were to drop down to 102.34, what would the binary be worth? I get the mid price. What would the binary be worth? So if I sold it, put in an order to sell there, put in an order at 76, I got filled at 77, so an even better price. What's this contract going to be worth if the USDN does move down from 102.39 right now down to 102.34? What's it going to be worth? Yeah, $50. Perfect. So if I want to take profit, all I'm going to do is I'm just going to click on this little X right next to it. Okay? And I can put in, all right, I want to buy back. Now remember the 43.57 rule? I like to buy back at 57. Remember, we got like a, bid-ask spread in there. That's maybe going to put you, like, say, at 47.53. But what if it gets down to 102.35? Do you want your trade to lose because of a tick? Okay? So I've just learned that it's more prudent. So I go in and I put in, for myself anyway, you do what you want to do. But I'll put it in to buy, say, at 57. And then I'll hit place order. And if I got that order in there to buy at 57, okay? And I sold at 77, how much would I make if it went down and I got out at 57? What would be my profit? $20. There you go. Perfect. Yeah, Greg, Harold, you got it. So I got a $20 profit trade. What's my risk on the trade? I sold at $77. How much am I risking? If I sell at 77, what is my risk? It's 23. That's right. Remember, the price I sell at is my profit potential. The price I buy at is my risk. So if I sell at 77, I can make 77 maximum, okay, if I held to expiration. $100 minus 77 is what I'd be risking, which would be $23, okay? Because remember, if I sell at 77, it can't go higher than 100, right? So if it can't go higher than 100, if I sell at 77 and the price can't go above 100, that means I can't lose more than $23. Worst case scenario. Now, what if I do multiple contracts? What if I go in and I sell 5? This is something that I'll do a lot. I go in and I say I'll sell 10 contracts, okay? I put them in there, and it's already moving. Go, we'll get those 10, all right? So we got 11, but let's say I want to get out of, let me cancel this one. I use this little wrench right here and I just hit cancel. Let's say I want to get out of 6 of these. I got 11 now. Got a nice little odd number. So I just want to get out of 6. I don't have to go close all 11. I can just close out 6. I can buy back when it hits 57. Just change the size and hit place order. And now 6 of them will be working at 57. This is actually one of my favorite things about the scanner is it links your orders together. If you're inside the platform, you're trying to figure out which ones do I have orders on, which ones do I not have orders on. There's your open, and then you go like, okay, where's my working? You got to find your working, and do I have them all covered? Especially if you have like 10 different trades going on at the same time, it can be really hard to figure out what you got working orders for and what you don't. The scanner will link them directly together for you, so it actually puts that contract, that working order, with that filled position. Makes it really easy for you. Sort of to know where everything's sitting at. Now, if I hold it and it expires at 102.34, let's say I never get filled, because sometimes it'll get like close, but it just won't fill you, and it'll go in and it'll just expire out, and you can actually still expire in the money. If I held it and expired at 102.34, and I sold for a average price of $72, what would be my profit on the trade if it expired at 102.34? So would I profit 100? That'd be my payout would be 100. What would my profit be? So yeah, 11 times 72. So $72 a contract. Yep. So, again, now if it's at 102.34.1, then the trade would lose. You can lose by 1/10 of a tick. Is it worth holding the thing till expiration if it's really close? Is that wise? Okay? Exactly. Not a wise thing to do. So you want to make sure you are closing out those contracts. Now that looks really, really big, but I mean, we're talking about $10 on 11 contracts, so it makes it seem big. This is all demo. But how do you link it? It's actually really easy, but if you just go to, easiest thing I tell you is go to the help and tutorial section, and they'll tell you what to do to link it. Okay, but basically there's just a quick plugin for Firefox and Explorer and Chrome. Even if you hate Google, I highly recommend Chrome. Even if you use it for nothing else but this, because it's faster, because you have live data streaming, okay, and it's more secure. So I highly, highly recommend you use Google Chrome. There's also more features in Google Chrome on the scanner than there is in Firefox and Explorer. But that plugin will link it, and then all you got to do is log into your account. But I walk through the exact steps, like literally there's like a 5-minute video, shows you how to set it up. I mean, it's nothing. Like a message will come up saying, hey, install the plugin. You click it. It's really easy in Chrome. There's more steps in Firefox and Explorer because of how they make you do things. So if you want to be set up in like literally about 30 seconds, then just go straight to it. And then what you'll do is log in. If it says not logged into your account, just log out and log back into your account. And you'll be all set. And it's just talking browser to browser. So when you click on it, it'll just open up the ticket. And it's just opening up the ticket, the exact same thing as if I was over here and I chose tear off ticket. It's the exact same thing. Except for we're filling it in automatically for you based on where the price is at and the quantity. When the position reaches your target, is your position automatically covered, or you have to do a place order? So Wendy, so if you put in a buy like right here, okay, like as an example, I bought this one at 21.50 to sell at 43. So if the market gets up to basically 102.49, it'll close out that position at 43. Okay, automatically. So I already have a working order to get out. So if I sold this at 72 to buy back at 57, and these are I'm just throwing on random demo trades. I'm not even looking at a chart right now. Okay, but if I sold at 72, buy back at 57, then it will automatically fill me as long as I have a working limit order in there. And again, back at the beginning, I talked about what limit orders are. So a buy limit is a price below the market. A sell limit is a price above the market. But yeah, Daniel, there's nothing special besides just click install and then probably log back out and back into Nadex and you're good to go. That's just so the browsers can talk. Let's see here. Make sure you don't have like incognito window turned on, weird stuff like that, because you're basically telling your browsers not to talk to each other. That's a big mistake people will make. Most people don't know what an incognito window is, but those of you who do, you're trying to be all secretive. Well, the problem is now the browser can't talk because it has to say, it's basically telling it what ticket to open up, so it needs to be able to talk to it. Let's see here. John, I'm not sure if I ever got to your question on can you buy the spread and make money? I don't know what you mean by buy the spread. You mean buy spreads? I'll be happy to answer you. If I don't get to you, I mean, I guess post it in the forum, but I'm not sure what question you're asking. I think I got everybody's questions. That really was our main topic. Let me just go to the PowerPoint, make sure we knocked everything out. But we wanted to go over to, getting started. How do you get an account open? What is a binary? You understand that now. You know what markets, you know what hours you can trade, you know how to place an entry and an exit order, you know how to amend an order. Obviously, this is just getting started. Okay, this is the basics of how to trade binaries. But if you follow these steps, you ought to be good, set, and ready to go. And ready to dive into the next level and hop on over to Apex. We'll help you out with that. And we'll be doing more advanced webinars for you as well here in the coming weeks. Okay? Am I associated with Apex? Yes, I own Apex, John. But the scanner is free, so enjoy. Can you buy the offer and sell the bid and capture the spread? Well, if you buy at the offer and you sell at the bid, you're going to be down the bid offer. You have to buy at the bid and sell at the offer. So if you want to do that, that's called being a market maker. So if you want to put up, I don't know what I think it's a minimum $250,000, and a lot of technology in place, and you have to be guaranteed making markets at a certain liquidity level, etc. There's a lot to it. Let's see here. To open a live account, reminder, go to nadex.com. Visit us at apexinvesting.com as well. And we'll teach you more about how to trade Nadex and get you access to the scanner. And hope you all have a great evening. Hope you picked up all the basics on binaries and how they work tonight. And look forward to seeing you all next week. We're going to dive into a lot of the intricacies of misconceptions that people have on trading binaries and mistakes they make when they're trading them. And hopefully save you from making a lot of those mistakes. All right, y'all have a great evening.